All right, it is 8:08. I'm super excited. Again, we're just gonna get right into it. You already know. I just want to come on here and just show you guys how I look at the markets, see if I see any possible setups for the Asian session. So, if you are here, you have any questions, you want me to look at a certain pair, just drop it in the chat. All right, and I already got my playlist together. What's good, James? What's goody goody? I'm just gonna look at some pairs real quick. So I was like, let me just go live and do it. I'm looking at some Asian pairs. Let's start with GJ. Man, I already missed my entry from yesterday. But I know it was coming up to fill this section. Let's see my 4 hour. Yep, because I already had took the first trade when it came down here. Right, it was the perfect 75% discount. Right. I love how the FIP settings just get you right from out the gate. Like, I love it. But yeah, this would have been a nice trade. Right. It broke that little downtrend, bullish engulfing, but this would have been a great wick entry. Let me show y'all what it looked like if we would have entered on the lower time frame. So look, when it came into our 75%, we actually got a 38.2 bar, right? I mean, it was perfection. For one, not only was this a 38.2 of it, I'm sure, right? I also know it's ended in bullish engulfing. So that entry, like 25 pip risk. And I was looking to catch it up to the first bottom. So it was like 87 pips. 87 pips. And then I had got out the market. I was like, I took it to my zone and got out. So I actually could have ended up with more like 119. Then it went to the next level, 187. But I ended up taking I got more than 2-to-1 ratio. So I was cool with that. But now in the 15-minute, I missed this entry. We had another break of the EMA. It came back and retested. Right, we got the little flag. So I would look in this area to see did I get any candlestick patterns that was showing me it was time for me to take that trade. Right. So I didn't get it until right here. Right, you want to wait for it makes sense to you. So to me, the only candlestick pattern out of this series would have been here. So then that would have been an entry I would have been okay taking. All right, and again, we got our fib from the 4 hour. So this is where the last low is. So about a 20 pip risk. And we'd have been in profit right now, but we already missed it. Another 61 pips. This took off from like 1 p.m. About a good intraday trade, about 6.5 hours. Right? You'd have got 36 pips if you'd have just took it to the next zone. Right? And what would have helped us stay in this trade? Well, if we look here, it closed over this main area, right? It closed above. So in this case, I would have actually felt comfortable enough. Again, our stop loss is down here, right? This is our entry. Our target was 2 to 1. That's okay, Gaga. Right? In all due time, right? They don't know. So our 1 to 2, right? Would have gave us that 40 pips because we risked about 21. We'd have got 40. Right? So we could have ended this trade once we would have hit your personal goal. But as you try to grow as a trader and you're trying to recognize a moment when you should stay in the trade, if we look, this candle closed above. Right? It closed above. So at that moment, that was key for us, that even if we get some type of retracement, most likely price is looking to push up more because we closed above a major area of resistance. Right? So in that case, if you would have stayed, you would have been up about 60 something pips. Let's see what the Hakanashi candle view looks like. And then we had a nice Hakanashi setup. So maybe once you've seen it close above, then you could have said to yourself, you know what? I'm going to see what happens. If a candle closed below, right? Because remember, our original stop loss is here. We hit our target. So we want to move our stop loss into profit. So if for any reason it returns, right, we're going to at least get this profit and we won't lose a loss. The loss area is the red area, right? Our profit is the blue area. So we was in this trade and we seen it close above, right? You like, you know what, instead of me closing the trade out and taking profit, I'm just going to move my stop loss up. Now, if it closed below, I might have considered closing the trade, right? And if it closed below, at this point now, I'm looking at 28 pips or so, right? So those are key things to think about when you're looking to continue a trade, right? Or close out the trade. Let me know if that makes sense to y'all, for y'all who watching, right? If you're thinking about holding a trade, does it make sense? Right? Just like now, price is up here, but we got the strong wick rejection. And if y'all remember from what I was telling y'all, right? If my buy candles are green and my sell candles are red, this wick candle, right, that push price down, this is actually, if we wanted to make it a full candle, this would be purple, right? And if we look at it, who actually won, the buyers or the sellers? What is this particular candle actually telling you? Right? That's why wicks tell you a story, because in no reality, all these little wicks are purple candles. That's the purple end of the candle, right? That's really what's happening. So this gets to show you, okay, I see the sellers trying to push the market down. I see them keep trying to push the market down, right? The first time they really won with taking control was this piece, because this is the first time, right, that they're really in control. You almost got them right here. They did a good job trying to take over right there, because if we see, right, the purple candle has purple on that side, but this side of the candle, because remember, the dojis is the tug of war, right? If you really understood what's happening with those wicks, this doji, we have purple on this side, green. It's a tug of war, right? Same thing like on these sides, we got purple and green on both sides, right? But right now, right, the buyers is winning. The buyers are winning. Right, if I put another purple top for the wick, fill it in like it was a candle, right? Again, the buyers is winning. The buyers are winning. It's the first time the sellers look like they actually took over. Right? Does that make sense to you guys? And then if we look at where this wick is and we look left, we can see that these last wicks were left up there. Right? It's going to be a strong area, right, of supply. Alright. These wicks was left up here. Right? So they were looking to get filled up. And that's exactly what happened. We got the drop, and then eventually price came all the way back in. and fully filled that gap up. Right, they came and grabbed it. So if I look lower on the 5-minute, right, let's see what happened on the 5-minute. And let me take the purple box away because that's just from the analogy from earlier. So, if we was looking at this right now, we would have to say to ourselves, what is happening? Right? We know what's happening. A tug of war is happening right now. Literally a tug of war. Right? When you think about Japanese candle, that's how you want to think about it. A price was trying to push this up. Right? Who pushes price up? The green. The green pushes price up. Right? And purple pushes price down. So right now, what does it look like? It looks like an even tug of war. Right? They fighting each other. Right? We look at the body of this last bar candle. And then we add the purple because that's what pushes it down. Who won in this case? Right? Who won in this case? It looked like it's more sellers. The sellers took over. Right? The buyers tried to push it up and the sellers said, nope, nope, nope. We taking over. Right? What does the one tell us? Right? And you definitely can see this when you're using, right? Now look at all the different candle reactions with the Japanese candles. Right? But like I said, you see this was a purple candle pushing it up. Now that I'm on the regular candles, I gotta change this to yellow. So my regular candles is different colors. Right? And we can see that the sellers came in. It was almost an even tug of war. And then they took over. The buyers pushed back up. Right? And now we're into this area. So who's gonna win? Who's about to take over? The sellers or the buyers? Right? When we look at the Hakanashi candles, right, we do got a setup. So let's remove these drawings. Right, first we know we are above the 62, only on the 5-minute. What is the 15-minute? Right, we're above the 62. We missed the main entry we wanted. Right, if I was looking to trade right now, would I be really confident to buy? I wouldn't be confident to buy right now. Alright, but this is GJ. I do see possibly a nice sell coming. First, I want to look at structure. I'm like, alright, Todd, we had an impulse move. We broke the moving average. We retested. We pushed up into our area value. We definitely see the sellers coming back into the market. We have a lot of wick rejection, right? So I might want to put my fib out from the low to the high. Right, get it precise. The low to the high. Right, if I want to get back in this buy with this big impulse move, let me look at the regular candles. Right, we have some imbalance right here. And I like where the imbalance is because that lines up with where I want to get my discount. So I'd rather wait for price to come all the way back in here. And then I'm going to check. Would it be beneficial for me to take this sell down? Well, price is right here right now. Right. Right. So to get into at least 50%, that's 60 pips. To get to 75%, that's about 100 pips. So I would not mind taking this trade, especially if I see structure is up here. This is our supply zone, right? So if that structure holds, right, I have a good opportunity to have the least amount of risk possible, right? Even 30 is probably too much. This could be like a 20 pip, and this is beautiful for GJ, right? So from the last high, which is right here, this wick, right, it's 12 pips. Let me see what my spread is for GJ. I kind of like this sell too. Let me see for G. It's not showing me. Let me check. All right, mine's is 7. All right, so cool. We're just gonna leave it at 20, right? So we at least looking for 1-to-1. Right, I want to risk 20 to at least get 20. So I'm gonna see where 1-to-1 falls at. That's actually lower than the 25%. So I'm definitely would be okay with at least knowing I should at least get 20 pips, right? Right, I at least want to get 20. So let me go to the 5-minute and see if we're getting the candlestick patterns we want to see. We already got 4 rejections. Let's see what Hakanashi is showing. So right now, I still don't see it being ready, so I will wait. The 1 minute has a nice little trap happening, so maybe we can use this one to help us. Right? If it break above, then we're gonna wait. If it break below, I'm gonna take this trade. And it's not that much risk. Right? But for the risk to reward, it's gonna be nice. Let me check the 4-hour. Ooh, yeah, buddy. Right? We had broke this structure here, and now we're at the retest. It's nice. We got a daily flag. Blue trend line looking to be broken. Alright, there go the Wiki Wicks. It's closing above. We're gonna wait. We're gonna wait till this candle is closing below. It's slow. Right, but let's see. I see it got it pushing up to here. So it just depends. Oh, we might be looking to enter when it comes back down there. Right, but if I see it push up and then it start forming earlier, then we'll even get a better trade. Right, it'll be even better if we can get it from up there. Right, because even just going to 25%, but shallow pullback, that'll still be 50 pips. All right, let me go to my price action candles. Still wicked. It's going up higher. Okay, we see it. We got this right here. And then we also have a wick right here. Right. It's probably looking to come into that last area. Right. And then it will have taken this liquidity out, grabbing that money, grabbing this money. It's the area right here as well. So if it grabs that, that's going to be amazing because that's going to be a lot of power. That's going to be a lot of power. That's right, Gogo. Show me some love. Let me see. All right, here we go. We're getting ready. Eddie Spaghetti. And we're gonna get our entry at the original section. Let's see what the heck is she doing. Got a little bullish engulfing right there. I mean bearish engulfing. So let's see. And this order block is right here. Go on and close below. Do us that favor. Again, there's a flag right there, so it could want to still push up to take these out, take those double tops out first. Alright, so that's what I'm waiting for. We're either gonna have an early entry right there, right, or we're gonna look to take it when it reaches up to that section. Still looking for it to come back into the zone. Yeah, buddy. Alright, so we'll come back to this trade. See what happens later. Alright, so let's look at UJ. UJ was just pushing up. Finally hit my... Look how precise it is to where I say the banks be hanging out, right? I was talking about that in class. Right? I was like, they know you get in here, will come right here to the 1.1, 1.2, sometimes 1.3, right? And then continue on. So this is like a perfect example of why I always add that extension area. And it broke the area value. Once it did not respect the 75%, right? It closed below. That's why I usually say that 75% is your big discount, but it's also area for your reversal because the market has weakened, right? We're not getting any more higher highs anymore. Right? It came to our area value, it broke it, closed below, retest directly under the 50. Right? If I take away the area value, right, the quarter point, look how precisely close below the 50, retest. So again, it's our area value. Big push off, a big sell. This is kind of looking like GJ in the same spot. So we got our support, we got our break of structure, we got our resistance, and that's the three pieces to the puzzle we need, right? Support, break of structure happens, right? Part 3 to the puzzle is If support is broken, we want to see a retest because we need the third piece of the puzzle. We need resistance, and that's kind of what is possibly being created right now. Right, we're in that area of value. All three pieces is aligned. Right, so let's go to a little closer and see what kind of price action are we getting. Right, we understand structure. It's a possible slight divergence right here. Right, price at a low that was broken. It's in the middle of retesting. We come up again. And then maybe continue down. Right, or go right and take us right back up. So right now we are above the EMA moving average, right? But we did hit a resistance area, right? How do you know? Well, if we go back in time, right, you know it's a major area of resistance if you have multiple touches in that area, right? So this is a strong area of value, multiple touches, right, for buyers and sellers, right, buyers, sellers. So once again, we could be looking to sell here. I even like to look at the 5-minute time frame. Right. Higher time frames control the market, the lower time frames start the move. So I'd rather be at the beginning of the move and not at the end. Right? That's how you really get those sniper entries. Hold this EMA. And then we want to see it retrace the EMA. And then that would be a really good indication if then we get some type of bearish engulfing at this area. Right, let's go look at that GJ trade. Let's see what's happening with it. Okay, so this would be the viewing if you took an early entry and then we waiting for the other setup, right? That's higher up after it actually takes out these areas. So let's check our RSI. Right, let's see if we have volume going down. Let's see if we overbought. Extra items to your trading to help you build up confidence, have a couple of checkpoints. So again, if I'm looking to sell, I definitely like price to be this high up, right? Because price does have a medium that it's always attracted to, and then it has a low, right? When price gets too low, it's always going to be at least attracted to the medium, right? Or back to the high. So at this point, if I am looking to sell, wouldn't I rather be here than down here? Right? If I had a choice, understanding volume and movement, I know prices are always going to stay between these two zones at some point, right? Even when it was outside the bounds, right? And that's not with me changing any settings, just notating we're outside of the bounds, right? It would be smarter to start thinking sell here than thinking buy, right? And if we line it up at this area, right, price push down like it did here, push back up some more, right? But it's pushing back up into this order block, back into the area value, right? It's building up its energy. And then for price action, did you wait till you get the type of candlestick pattern you're looking for? In this case, we would have been waiting for bearish engulfing, which we end up getting it. So you're going to feel a lot more confident to sell at this area. Right? You're going to be above the high. In this case, it's like a 50 pip risk. Right? So you're looking to get 50 pips at least. But again, you could have got your 20 pips and dipped. end up getting your pips about here. But look at the correlation between when the market dropped and how price was overbought. Okay, price was down here, right? You could have thought this market was selling with all these bearish candles, right? But if you didn't realize, oh wow, the volume is on this end, you probably wouldn't want to sell at this moment, right? But this makes for a better trade. Why? Because it's overbought. It's outside. That means price has to at least come back to the medium. Right? You see that. That's the first place to stop. Right to the middle. Pushed up. Then it made a new low. Right? If you could have held this trade, it ended up coming back to your entry area again, but you end up being able to get almost 128 pips. Right? Because look at price after it came to this low. Right? That could have been a moment where you decided to possibly exit your trade. We see it just broke the moving average. It's retesting the moving average. That usually gives it power to push up. Right? But we see that we in a supply area. So yes, we just broke and retested, but that's to push us up to get back in here. Then we came down, retest, made a lower low. Right? We're making lower lows. Then price retested and gave us divergence. Right? Price is still pushing up. Let me change the color so y'all can see it. Price is pushing up. Right? And price is going straight. That's a sign that even though we're pushing up, we're looking to go down. Right? Then what did price do? We're back here. But again, this time, this high, right? This one was lower. This high, this one is lower. Right? And now we're back underneath the RSI and exactly like clock that out on this. Right? From here to here was about 5 side, 4-hour candle ride. Right? But it tanked lower, so it ended up giving you like 5 hours. So that's also an indication you can use on getting in the market and knowing when to get out, right? Because this was a nice trade, right? It wasn't as many pips, but you had a nice risk to reward. You got 55 pips. It pretty much told you, hey, that down move is over. And what happened following directly after that, right? A strong push up all the way back to the entry, right? There's no reason if I'm going to be at 50 pips and then all these hours later, I'm back at entry. I should have closed this out, right? I should have closed out this 50 pips. End up giving me a nice re-entry back into the golden zone, right? And then this time I got 123 pips. So now I got 55. This same move from the top to the bottom, right? Even though it's this pretty much less distance, it still gave you more pips, right? It's just letting you know, hey, that ride is over. You might want to get out because now we're starting to make our wave back up. So now we're back here and we see price is poking up forward, right, on the RSI. So I might still want to keep pushing up more. Let's see for 5 minutes, it's still going up. The 1 minute finally turned in. Like, look at it. Look at the 1 minute signal. So when this candle closed, this might be the entry we're looking for. Right? So it just finished closing. Let me remove this. Alright, so let's just say we pulled the trigger there. Let's see what the risk is. Alright, and this will almost be like a wick entry, so this is the last high. So I guess still 20 pips. So I mean, if it closed above this, then it's probably going past it anyway. Right? Maybe even 25 to be safe. So let me go back to, what was it, the 1 minute? So again, That's what I see for GJ. I see GJ coming down super hard, and we got two areas of imbalance to fill, especially this area, right? Because it's definitely bullish, right? But if we clear the big move up, the 4 hour was telling us that we are at this area, right? Support, break a structure. So we already hit the resistance there one time. We came down there. We came down there. So it might be ready to break this time. Because again, the more holes you poke into the structure, it weakens and then it breaks. And then we got this order block up here. So maybe it needs to come up here. All right. Support, break a structure, retest, retest. So that's going to be the third time. I got that candle pattern we're looking for. Alright guys, I'm gonna get up this call. Right, the setups that I looked at, they're not all the way ready unless you was taking an aggressive entry and just following market structure, supply and demand. But I like what I see right there for sure. We got like 6 more seconds for that candle to close. Alright guys, but I appreciate y'all hopping on, and for my students, I'll see you guys in class. For everybody else, just keep an eye out for the next time I just hop on.